Hello, I'm Paddy Delaney, and welcome to Integrated Infrastructure, a podcast dedicated to bringing you news and views from industry leaders involved in the development, design, construction and management of the many built forms that make up Australia's integrated infrastructure. This is episode 23 of Integrated Infrastructure, and our final podcast of 2020. And what a year 2020's been. And to round it off, we have a great guest in Adrian Dwyer, CEO of Infrastructure Partnership Australia. The IPA is Australia's leading infrastructure think tank, addressing infrastructure from the point of view of users and taxpayers. They play a key role in informing industry and individuals, in addition to advocacy work and policy work for the industry. We really do cover so much ground in this podcast, starting with the role that the IPA plays in the industry. And after a short conversation about waste to energy, we get into the meat and bones of 2020 from an infrastructure perspective. We talk about what 2020 was supposed to look like. We talk about the fantastic private and public partnerships that evolved out of the crisis, what a great job government and industry's done in keeping construction going, and why that bodes well for the recovery. We dive into the outlook for 2021, asset recycling, investment, and the opportunity to reform in areas like land tax and road vehicle charging. I hope you enjoy this podcast, but before you go, I'd like to take the opportunity to thank all of the guests and listeners this year, and I look forward to bringing you more conversations in 2021. Merry Christmas, Happy New Year, and here's my conversation with Adrian. Adrian, welcome to Integrated Infrastructure. It's fantastic to have you on the podcast, and thanks very much for joining us. As always, it would be great if you could kick off and tell us who you are, who you work for, and what you do.
Well, thanks for having me. So I'm Adrian Dwyer. I'm the CEO of Infrastructure Partnerships Australia, we're an industry think tank and member network. Quite unique. We represent the public and private infrastructure sectors. So about 40% of our membership is public sector bodies, 60% private sector. The public sector ones are all the kind of major state treasuries, Commonwealth treasuries, the delivery departments, planning departments, independent infrastructure bodies. And the private sector side is the kind of full life cycle of infrastructure, from owners, operators, constructors, engineers, lawyers, financiers, and the sort of technology providers in the infrastructure sector. So 150 members, and I've led the organisation for the last 2 and a bit years. The last 12 months has been interesting, to say the least. But that's kind of who we are. I'm happy to tell you about my background. But the role that we have as an organisation is to try and, I guess, be unashamedly pro-infrastructure, but on the side of users and taxpayers. So we think about policy, we think about projects, we think about information, data, about how we can make sure that the best decisions are made, the best structures are in place, but we're also out trying to think ahead of governments and try and front running on some reforms and trying to get governments towards making good decisions for users and taxpayers.
Yeah, fantastic. And around that advocacy piece, you've got some great information that you put out there, haven't you, through the website, through your own podcast, and where people can go and find out, what it is that you're talking about at the moment.
Yeah, so all of the research we do is all public. So we're not sort of some shadowy organisation. We try and operate in the sunlight, and we have a think tank function that produces a whole host of bits of data. We run something called the Australia-New Zealand Infrastructure Pipeline on behalf of the Australian New Zealand governments, which is a comprehensive view of the forward pipeline of infrastructure. Anything over $300 million is on that website. We do long form policy research, but also we do lots of short form bits of work. We do videos, we do a podcast, we do all sorts of things that are trying to kind of get the message out about infrastructure, because it's kind of a complex area, right? It's a bit esoteric to people that everybody knows what a road and a bridge and a pipe is, but actually the economics that underpin it, the politics that underpin it, there's a lot of complexity in that. So to some extent we try and exist to help kind of translate that engineering stuff or commercial stuff or policy stuff into the real world.
I love the videos that you do. You manage to condense those complex issues into short passages and make them interesting and entertaining as well. But then I just went back and revisited the waste to energy policy document that you put out earlier today, and it reminded me. You've got the mix in there of the politics, of the economics, but also the technologies as well that can be used, and reminded me a few things that I'd forgotten as well. So
it's interesting.
Great reference point.
We don't we're not experts in any of these areas, but actually policy is kind of a discipline in its own right. It's the ability to be able to tell a story, to solve a problem, to bring the technology people that for whom energy from waste might be the particular type of combustion, along with the commercial people for whom it's a spreadsheet, along with the public sector people for whom it's solving a waste problem, and try and kind of crunch that down into an understandable suite of recommendations for government to follow. And I particularly like the energy from waste stuff because it's a new market. If we think about things like energy and we think I've got this sophisticated market with a regulatory model and pricing and participants in it, and the bits that can be competed are, and the bits that are monopoly type infrastructure are regulated. But actually energy from waste is this whole new market creation opportunity around what do we do with the increasing waste we have? How do you make sure that we're able to move that towards circular economy principles and all of that kind of stuff? And it is infrastructure, but in the past it's just kind of been this municipal service. So that one's kind of one of those new frontier areas for us. It's not the traditional energy, telecommunications, water, transport. It's kind of a whole new space. So they're the fun bits we like to work on.
Yeah, absolutely. And there's a community engagement battle to be had there as well, isn't there? That somebody needs to get hold of that and drive that aspect forward as well. Because I think business and industry is sold. It's the community sort of question that's the difficult one.
Yeah, one of the problems with energy from waste, people's instinctive reaction is it's sort of a backyard incinerator program, and the reality is that it's a vastly less worse option than burying stuff in the ground and letting it leach methane for the next 70 or 80 years. Is actually to look at opportunities to, yes, do the things like avoiding the waste in the first place, yes, recycle, but once you get to that point of the other option is to bury it in landfill, actually the environmentally friendly option is somewhat counterintuitive, which is to combust this and recover the energy and use the byproducts. But these aren't simple linear things. You've got to get over the social license issues with that and explaining to people that actually this is not just burning stuff to get rid of it. You're recovering resources through it. So it's kind of I like those ones because they're interesting areas.
No, fantastic. Before we get in the weeds on something like that, which I could personally talk about for ages, but 2020. I'm keen to get your view on the outlook of infrastructure, sort of going forward, 2021. But just take us back to January 2020. What was on your, what was your sort of outlook for the year then? What did you think was going to happen for infrastructure in 2020?
So January 2020 seems like a long time ago. I think that we were looking at a year in infrastructure where there were some challenges on the horizon. We've had, it's been a big decade for infrastructure, really, since probably 2011, 2012. There's been a very substantial increase in the amount of money being put into greenfield infrastructure, driven by some things like the brownfield transactions. So the asset sales in New South Wales and Victoria generated money that was invested in infrastructure. And then you got this virtuous cycle because the growth in the economy generating new revenue for the states and the ability to invest in infrastructure. And all of that was meeting population growth, and to some extent meeting population growth that had already happened. So we were kind of in this catch-up phase. So we were faced with this, I guess, a challenge of a market that was relatively hot from a construction perspective, the capacity constraints associated with that, probably some overzealous risk transfer from public sector to private sector in the greenfield space, alongside continued relentless population growth. So we're still in catch up, but we're still adding, I think at that stage in January last year, the run rate was a new Canberra every 18 months. And that's how many people. And most of those people were going to be in Sydney, Melbourne, Brisbane, and Perth. So just this, a kind of a high quality problem to have relative to other parts of the world where you've got stagnant or declining populations. You've got challenges of not being able to get the funding for infrastructure. We had sort of the inverse of those. Plenty of people, but maybe not some of the key people that were needed. That goes to your work, is finding some of those key people. But you would have seen these shortages of some really key skills, like tunneling engineers, program managers with 10 years of experience, project managers that have done not $100 million projects or $200 million projects, but $10 billion projects. And those people just don't freely exist. So we were facing all of those challenges. And then you were beginning to hear murmurs about a rough flu that was coming out of somewhere in China that none of us had ever heard of. And I think that kind of mid-February to mid-March, everything changed. And we came to this realization that the 2020 we'd all been planning for, with some great opportunities but some challenges around the edges, was going to be entirely different. And I don't think that mattered whether you were running a multi-billion-dollar infrastructure project or a small think tank like I do. We all had to change what the way we operate our businesses almost overnight. It's in many ways quite exhilarating, and in retrospect, when you come hopefully towards the other side of that, you realise that actually there were some pretty cool things you were able to do because change had to happen. And I don't just mean from a my business's perspective, but actually some of the collaboration between government and industry was incredible. I mean, so it kind of goes to the core of what infrastructure partnerships Australia is. It was kind of the best of public and private operating together in partnership. For best for user, best for taxpayer, and a cut through things that reforms that had taken decades were being done in weeks, because necessity was there. So it wasn't the second quarter of the year any of us expected, but and it's been
bonkers.
Tough going. But,
I remember being right at the beginning of it. I mean, look, we've done some different things this year. This being a great example of it. But I remember listening to your interview with Tony Shepherd, and you were talking about the I don't know. I think was that April? Was it April or May?
We'd have been kind of late April. I think we recorded that.
Yeah, and you were talking about the sort of South Korea is doing this, and this is a good example, and what have you. And sort of, I think we all thought that we might be coming out of it soon, and yet look at the rest of the world. There's we're so lucky in Australia. We're lucky in I think a lot of the attitude of people in Australia has been really beneficial. I mean, we have 91% compliance in New South Wales for our lockdown, and talking to your point there about the collaborations that people have found. I was talking to Alison Myrons on the podcast a few weeks ago, and she's just one on her wish list for the future is to be able to maintain that level of collaboration between client, contractor, and unions. They've had some great results with unions as well. So no, you completely agree.
Kind of it was an interesting time because there was no playbook for it. So I felt this. You looked at political leaders around the world, and you think, like, you wouldn't wish it on your worst enemy, some of the decisions they had to make in this kind of uncertain environment with incomplete information, with no history to follow in order to predict the future, and then just getting beaten up for the decisions they took. But
still getting beaten up.
In Australia, we, in hindsight, I think we got it right. We learned from the mistakes. That there are some cultural reasons why I think we did a good job, and long may it continue. But Australians are compliant people. We tend to do what the government tells us to do. I think we were helped a little bit by the kind of characteristics of the city, the time of year that it hit us, and I think to some extent we were if you think back to actually January 2020, we were all talking about bushfires. We kind of forgotten it now that actually this year started with droughts, bushfires, floods, and now a pandemic. But all of those things are reasons why I think we've done well, because we're a country that's used to natural disasters. We're used to, in a natural disaster, listening to the experts in that particular space. So during the bushfires, we listened to the Rural Fire Service. We listened to, in New South Wales, Shane Fitzsimmons tell us what we need to do, and he's the expert, so we follow his advice. And then when it came to a pandemic, there were a group of people that none of us ever knew existed, chief health officers, and the chief health officers came on and said, hand hygiene, wear masks, social distance. And in the same way we listened to Shane Fitzsimmons about bushfires, we listened to Kerry Chant and others and followed their advice. And I think it's been a pretty good outcome so far.
I'd agree, and that's a real community. That really is when people are feeling there's a cohesive effort, cohesive effort to get to the same destination by people and to comply. It's awesome. Before I sort of start crying and about how amazing Australia is,
hey, there's some rough points. There's some things we can get better on as well.
Yeah, there are. But I'm definitely happy that we're going into Christmas in a lucky position. Infrastructure going forward, then. Give us your sort of potted outlook of where you think 2020. What's 2021 going to look like and beyond.
I might just trace the bit in between first, because I think we've got to give credit to governments for one thing in particular they did in Australia, was keeping construction open. And in retrospect, that seems like it was quite a simple thing to do. But there was a point where, it was looking pretty shaky about when we went into that first lockdown around March time, about whether construction would stay open. And I think the sector did a great job in being able to work with government in partnership and say, well, actually, we're a heavily controlled environment. There are already a whole set of layers of controls that exist on work sites, and we can add in a COVID safe control over the top of that. We can add in masks and distancing and different entries and exits and alike, and was able to give government confidence that the sector could continue to operate. And I think that is, you can't overestimate the significance of that for the Australian economy. That over 1 million people employed directly and indirectly in construction were able to continue to go to work, counted as an essential service. Those people weren't leaving work sites and going and joining a Centrelink queue. They were back at work, albeit with reduced productivity. But do you know what? 10% lower productivity is better than zero. Other countries around the world weren't able to do that, weren't able to meet that level of confidence between government and the deliverers. And it's taken an awful long time for those construction industries to spool up again, to get that economic activity happening. So there are GDP points in the Australian economy and people in jobs that wouldn't otherwise be in jobs for those decisions. And I think that it's given us a pretty solid base to build on for the way out of this. And it's also meant that, to come to your question, it's meant that when governments look to a sector to deliver stimulus into the economy, infrastructure construction has been front and center, because it's a sector that stood up and delivered during the crisis in a safe way. And actually it's ready to go when government pulls the stimulus lever, which it's doing at the moment. And we've just had a delayed federal and state budgets over the last 2 months. And in virtually every single one, but particularly in the big funding jurisdictions, the Commonwealth, New South Wales and Victoria, we've seen already large infrastructure pipelines added to, stuff drawn forward in those, tens of billions of dollars of additional funding, which, because the sector is match fit and already going with, they're ready to deploy that. And like I say, there are genuinely people in jobs that otherwise wouldn't be in jobs but for those decisions.
Absolutely. We're talking about that pipeline that's come now because of these big decisions by the New South Wales and the Victorian and Queensland to some extent sort of governments. And I think there's a thing in the Fin today about the concern about the amount of work that's coming and the industry's ability to deliver that work. From my point of view, I think there's a question about skills, and I actually think there's if we can get the immigration system right, I think there's actually a great opportunity to attract some fantastic skills internationally to Australia right now, because where else would you rather be?
Yeah, I think it's a good point. I often talked about this to friends and family in the UK, and you can't, when a crisis comes, you don't you don't have to outswim the shark. You just have to outswim the other guy. And right now, Australia's outswum everybody else in my mind. And you look globally, and you'd say, well, Australia's now got a global scale infrastructure program. We will be seen as a strong economy, but a COVID safe economy as well. And I guess there's a degree of national pride around the way that we've managed it as a country, but also I think a sense that it's a sort of a grown up, sophisticated country that's been able to deal well with the challenges. Now, if you're, particularly in the construction space, but the broader infrastructure sector, it tends to be a globally mobile workforce. And you can imagine there is a strong desire to be involved in a massive infrastructure program in a sophisticated country that is pandemic safe, or at least thus far is pandemic safe. I can see us, I can see huge opportunities to be able to draw on global talent to deliver the program, but I can also see it driving the migration component of our population growth, which gets us back to the point I was talking about at the start of 2020. You're dealing with population growth, and these things become not so much self-fulfilling, but kind of self-replicating in a sense. As you attract people here to do these kind of highly skilled jobs, they settle. They do what I did 10 years ago, and turn up with just you and the girlfriend at the time, and now we're husband and wife with 2 kids, and a house and a mortgage and a cat, and that contributes to population growth, and then you need to start the cycle again about building the infrastructure to support that. So I just think that's abound with opportunities. But to your point, we need to get the settings right, because you can't do this when it's too hard to bring the people or attract the people to Australia, not because of the natural elements, but because of the impediments we put in place with a migration system.
Yeah, absolutely. That change from the 457 visa to the 189 makes it far less attractive for, you're talking about needing a project director or a program director that can do a $10 billion job. Well, if you're only promising them a visa that's going to go for 2 years, why on earth would you up sticks and come all the way over here with no promise of that future? And the reality is that we should be hoping those people stay. We want their money. We want those people, high earners, and because it really does propel the economy on. So there's lots of reasons. I know we're going to have a chat about it in a minute, but lots of reasons why infrastructure can be one of those drivers to get us out of the recession. Or not that we're in a recession anymore, apparently. But one of the reasons that governments can have these big infrastructure schemes at the moment is because money is cheap, isn't it? They can borrow. There's a lot of opportunity to borrow, which means that the sort of landscape for infrastructure investment has changed as a result of COVID, and the opportunities to invest now. But what's the outlook for that sector in terms of the arc of a recovery, and where does investment sort of plug in, and where can they help in that recovery piece?
So there's a lot to unpack there. You're right. Money for governments is cheap. Treasury, a $550 million Treasury bond was just put to market with a negative yield. So people are paying the Australian government to lend their money to the Australian government, which is like absolutely remarkable. But ultimately that money has to be repaid. There are balance sheet constraints. We've seen New South Wales and Victoria both downgraded from a credit outlook perspective by credit ratings agencies this week. It doesn't have a great deal of material impact on their borrowing rates, but it does it does add a bit of a constraint in about the way that they manage their balance sheets. But nevertheless, availability of money doesn't seem to be the problem. But that's borrowing at a sovereign level, so borrowing against the taxpayers. So I think where much of the investment part of the infrastructure community is more at the project level. So it's owning an asset, or it's being the investors behind something like a PPP, which is either demand risk or government as the counterparty to it. And I think there's probably a bit of a challenge for government there, is if money is essentially free and freely available, and if you've loosened the fiscal strings so you're prepared to borrow to build, it does tend to nudge you down the line of, well, we'll just do it ourselves, we'll borrow the money and build the project. And the challenge with that is that it probably removes some of the discipline around how you do things in the most efficient way possible. And there are a whole bunch of different opportunities for doing that. But what we saw over the last few years, where there was a bit of a tighter fiscal constraint, be it self-imposed or otherwise, we saw governments doing some fairly innovative things around asset recycling, around government building and then selling down assets after the initial sort of risk profile was taken out, the kind of delivery risk. And what that saw was a lot of very useful microeconomic reform, driven by not the purpose of the microeconomic reform, but by the purpose of releasing capital that could then be invested in new infrastructure. So that's what happened in particular in New South Wales, Victoria, to some extent the ACT.
We just lost the sound there, and we were just talking about asset recycling, so I'm going to edit this, but we're going to come back into it. But we were talking about the I think that the fact that money is cheap, but when it was tighter, that governments did come up with innovative ways of borrowing money and then asset recycling, and how that could be an option for the future as well.
Yeah, I think it could, because I think that, as I mentioned earlier, we're going to have to. I should be absolutely clear. It's the right move from governments right now to borrow to build, to borrow to stimulate the economy. That money is cheap, and even if it wasn't that cheap, it is the lesser of two evils to borrow that money and stimulate the economy versus not stimulating the economy and allowing a precipitous decline in the health of the economy. So it's absolutely the right move. But at some point, minds will turn to balance sheet repair and paying down some of that debt, or at least stabilising that debt. And I think that will reignite the conversation around what it is sensible for the government to own, whether there is a wisdom in taking legacy assets, the mature operating assets, moving those into private ownership, and then using that money to either meet the needs of the infrastructure program or to recalibrate balance sheets. And I think that we'll be having that conversation sooner than we think. There are still a huge number of assets on state government books that have infrastructure type returns. Long dated, stable returns, inflation proof, recession proof returns that make a lot of sense to be held under a well-regulated, well-structured market model rather than by taxpayers. And that conversation, I think, will lead to a sort of another round of sensible asset recycling, and then hopefully spur on a greenfield building, which gets to that virtuous cycle I was talking about earlier.
I thought that COVID would have been a good example, a good opportunity for some of those politicians who ideologically won't go into asset recycling to be able to open up the opportunity to go and do that now. But it doesn't seem to be the case, for some reason. But I wonder if that will change.
Look, it might. I think often you get a degree of entrenchment in politics where it actually needs changes of government, not on necessarily along party lines or ideological lines, but it's just the act of changing government it can be quite cathartic in dropping those sort of strongly held views that are strongly held because someone once said them and then they become fact.
Yeah.
So I think in some Australian jurisdictions, that kind of psychological hurdle of recycling assets won't change until there's either a cataclysmic need to, or a change of government allows that to occur. But it is particularly striking to look at the New South Wales and Victorian response to COVID versus, say, the Queensland response, where New South Wales and Victoria have been able to dramatically increase an already large infrastructure spend because they've had the balance sheet and budget capacity to do it, versus Queensland, which is essentially maintained the infrastructure spend. Now that's good to be able to maintain it because it's reasonably substantial anyway, but they just haven't had the capacity in a non-asset recycling world because they've had to borrow before the crisis to fund their infrastructure, and they haven't had the headroom to be able to increase their program. Now, I should say, in all of this, when you're going to stimulate the economy, you've got to invest it in the right stuff. And I think that's the challenge for governments. Now, changing the numbers on a spreadsheet and increasing the infrastructure investment profile is half the challenge, but actually getting it out the door, making sure it's spent on the right stuff, making sure you're not overstimulating particular areas of the market, making sure that money is not wasted. They're the challenges that those states face now.
Yeah, absolutely. Hey, I'm conscious of time. I was really keen to ask you what's important to the to Infrastructure Partnerships Australia right now. What are the key issues for you?
So right now, it's some of the things we've already been talking about around how do you make sure that stimulus is sensibly spent? How do we get, when we're past the point of the initial recovery, how do you get the right settings in place to make sure that we're not just deferring an infrastructure recession, but we're actually getting the economy through this and building beyond this and getting the population growth back that then supports efficiency in the sector. But for me, I think that beyond those kind of immediate COVID recovery stuff, it's actually about how do you not waste a crisis. So how do we use the willingness around partnership, the cadence with which we've been able to get through changes that would otherwise have taken years? How do we use this opportunity of a reset that comes from COVID to tackle some of the bigger challenges that we have as a sector? I've been really pleased by some of the actions of treasurers in particular around saying, well, what are some of those reforms that have been really tough to do, but now there's an opportunity to do? So New South Wales recently announced that it would move from stamp duty towards a land tax model. Every economist worth their salt has been saying for years we've got to move to this more stable model of revenue that's around property ownership rather than property transactions. It does things like value capture, it does things like revenue stability that we've all said is a good thing. And actually the Treasurer here in New South Wales has taken the opportunity to do it. The Victorians recently announced the first step on a journey towards dependable revenue sources from roads through the introduction of a distance-based charge on one part of the vehicle fleet that will grow over time. So I'm really pleased by those kind of in the land tax case, a really big reform introduced because the opportunity exists in the road user charging space, a small reform that will grow over time, and then we'll see it with asset recycling and others. So that's a focus for us, is how do you get that reform piece up and keep the momentum of change that's happened through COVID to kind of do things differently and make sure that we don't lose sight of that because we're too busy building big projects.
Yeah, fantastic. And I know we haven't touched on it, but for you, it's not just about the recovery. You spend a lot of time looking at productivity as well, which is something that the economy has really gone down in the past 10 years or 15 years, and we need to see a way to get that back up again. So I know that's a key part of your sort of conversations that you have as well.
Yeah, and actually, there's so many COVID opportunities in it as well, because and I know you didn't want to go down this path, but I'm going to do it anyway.
Okay.
There were loads of little things that happened in COVID that we need to retain. So, for instance, if you cast your mind back to March and April during the great toilet paper crisis, we relaxed a bunch of rules that were in place that had curfews on deliveries to supermarkets in urban areas. We said that you can't deliver to, this historical thing was basically after whatever time of night it was, you couldn't deliver to a supermarket because of noise for residents. And that's a perfectly legitimate amenity benefit that you'd want to keep. But there was short-term relaxation of those rules to make sure that we could get toilet paper and pasta into supermarkets. And you know what? The sky didn't fall in. And actually, it turns out the vehicles are a lot quieter than they used to be when those restrictions were put in place. And we'd like to see the productivity opportunity taken to say, well, actually, what should we reasonably bringing back from those restrictions, and making sure that you're protecting amenity, but you're also making sure that we can have a productive system where we don't have large delivery trucks traveling during the peak hours when they're delayed by congestion and they delay everybody else by congestion. And in fact, they could deliver at 2:00 in the morning, not wake anybody up. And there's fresh fruit and produce and toilet paper and pasta in the supermarkets in the morning. Everybody wins in that. But it took a massive crisis like COVID for us to start to tackle some of that stuff. So where it comes to productivity, a lot of it is just making sure that we don't fall back into our own rather lazy ways of doing things.
Yeah, fantastic. I hadn't even thought about that, but it's so true. Okay, you need to go. So I'm going to ask you our final question, which we ask all of our guests, and it'll be our final question of the year on the podcast. So it's going to you. What are you excited about? What are you looking forward to?
I'm excited about having a holiday at Christmas. I actually think, joking aside, the whole sector's been running full tilt for the last 8 or 9 months. And I think everybody needs a good break. We had all of that exhilarating components of trying to work out how to operate in a COVID world in April and March and May. And then that leading into actually all the things that were meant to be happening at that time have been pushed back into the latter part of the year. So budgets that were meant to May, June, July have all happened in September, October. And that sort of there's a flow-on effect of new projects released, new funding available, everybody's bidding on things. So I think if we could all agree just to down tools for a couple of weeks over Christmas, give everybody the opportunity to recharge, look after our collective mental health, and then hopefully hit a 2021 that looks better than 2020 did.
Yeah, absolutely. And I think most people are going to be back in January rather than having the whole month off. And, so I do think people are going to get back to work, but I couldn't agree with you more. It's definitely the year to take some actual time off and see your family and enjoy all that time and enjoy the summertime. So, Adrian, thank you again. Thank you so much. I wish you a Merry Christmas and a Happy New Year, and I hope you have a great break with your family and the cat and what have you. And, if there's an opportunity to come back and have a chat next year at some point when, we see what's happened to the world and the infrastructure market, that'd be fantastic.
Thanks for having me on.
Absolute pleasure. Cheers. Integrated Infrastructure is powered by North Search, specialists in executive and technical search across engineering, design, construction, property and energy markets in Australia. If you'd like to find out more about North Search or get involved with this podcast, you can click on the links in the show notes or email me directly at the address on the screen. We hope you enjoyed this episode of Integrated Infrastructure. Please tell your friends and colleagues if you did, and we hope to see you again soon.